Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the wonderful Wednesday, the June 10th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered there, too. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to La Show. Right now, we've got a mixed bag out here, kind of mixed similar to yesterday. The NASDAQ and the semis are the ones that are in the green. You've got the NDX 100 up over 1%, 104 points. The semis up about 0.5%. That's 8 points the upside. NASDAQ Composite itself is up 0.7%, 65 points. The others to the downside. Dow up about 0.5%, 116 points. The S&P 4, Russell 2000 is the big loser. Well, the trannies are the big loser percentage-wise. They're down 2%, and the Russell is up nearly 2%, 1.8%. Gold is back $2. Silver down 2 pennies. Light sweet crude off 15 cents. The 30-year Treasury trading up 1 6/30 seconds out at 175.16. The big winner chicken dinner leader in the clubhouse dollar-wise is Tesla. It's up $75 or 8%. Amazon's up 48. Wins Financial Holdings is up 333%. Must be a IPO or buyout or something. It's up $25. Only trading at 32. That's quite a move, huh? 25 to 32 is trading at 7 when it closed last night. Liberty TripAdvisor Holdings up 23. To the downside, Credit Acceptance Corp off 28. FANG DD down 29. Booking Holdings up 26. Boeing is down 11. So let's begin by taking a look at Amazon. For Mr. Bill in the Tiger's Den, he aptly pointed out a couple of the daily topping signals. And topping signals out here, we can see price moving higher, doing less relative energy. It's been doing that really for quite some time. Out here, those are the black diagonal lines that are on my screen. That's the Rhodes Momentum Indicator signal. It only becomes a problem if we see a bearish reversal candle. You could actually see that today in Amazon. There's a possibility it could generate a shooting star. If it did, Mr. Bill, then Amazon would be, you'd like to see the charts. That would make a lot of sense. That would be very helpful, right? There we go. Sorry about that. My little multitasking is off for the day, so you don't have to cut me slack. But if we do take a look at Amazon, here's what we know. Well, first, you know where support is at, right? Because it's clearly articulated here. It was tested and rejected. And that's at 2337.80. That's that TD9 breakout support level. That was tested back here on May 27th. Since then, at 2,300, we've gone up to 2,700 out there. So a nice move. Today is also going to be day number 9 of the TD9 count pattern, assuming that things don't go to heck in a handbasket at the close, but should be day number 9. So that's a topping signal, Rhodes Momentum Indicator, and you've got wave number 3 or wave number 7, those letters C and G on the top of my screen out here. So what are you going to do, Bill? Are you going to take the short on Amazon? I don't know if somebody is or isn't out there. Of course, if you were, we'd really want to go take a look at the short-term time frame charts and see some type of level of support broken. All right, let's go do that. We can go take a look at a 30-minute time frame chart out here. Well, I think we can. Let me just kind of slide this back out here. So here's the 30-minute time frame chart, and on the 30-minute, there's your shooting star on the 30-minute time frame. That could occur on the daily. At the end of the day, it's possible. It's a similar-ish style candle to what we were taking a look at here. So here on the 30-minute time frame, you get the topping signal, bearish reversal candle, but price hasn't been able to break through any levels of support out here. So I would say on a 30-minute time frame, the price is above the top of that profile out there, so it's not exactly giving you a real bearish message out here. Ideally, you'd like to see some level of support hold. Maybe you're going to do, as you say, some type of spread or whatever you might do out here. If I go to a super duper short-term time frame chart, the 10-minute, let's populate this little booger, see if we can find a breakout. Oh, shoot. Something happened. I've had some system problems. I had some system problems last night, and now I can see that it's stretched all the way over to here, too. This is a bummer. That's okay. I think I have this. I don't. Well, I'll do it. We've got it all set for the 15-minute. I'll just change over here to a 15-minute chart. That would make sense anyway, so I don't know why it would make sense, but we're going to do that here momentarily. And yeah, that's a fit. So I don't have, we have a similar type of pattern on the intraday charts out there, Bill, but nothing that is really breaking through support. Anyways, that's our well, let's get, what's the weekly chart look like for Amazon out here? Might as well take a look at what's going on the larger time frame out here. And on the weekly time frame, price is taking out its TD9 count top. It's doing that this week out here. That tells you about a bullish and really, really strong move to the upside out there. Continued in the monthly time frame, you're in bar number 7 of a TD9 count. So, Bill, this may have further to run to the upside out there as we take a look at Amazon. Hope that helps you out. Watch today's candle session, for some type of clue out there. Back to the no other requests that I've got at this stage of the game. So let's just take a quick peek at the markets. Oh, I know what we want to do. Before Jay asks, let's just give it to him. Not that he was going to ask necessarily, but there are some new profiles that are attempting to form out here. Attempting to form because Stevie is using his advanced Doppler tool out here. So we should know by early evening whether or not these take hold. So you've got 3 new profiles. You've got the ES Mini. The top of that box is 3231. That's your very left-hand panel chart out there. And the bottom is 3164. It's a bullish structured profile. We like to say nothing more bearish than a failed bullish pattern. So if you saw the ES Mini close below 3164 for 2 sessions in a row, that would be your signal of a change in trend. No new profile inside the NQ, so it may be targeting 10637. It's 1.272 Fibonacci expansion of its last set of swing points out there. The Dow bottom of its profile is 26,610, the new one that's forming, and the top is 27,624. And inside the Russell 2000, price is trading below the top of the profile. The top of the profile is 1439. I take that back. It is not. It is trading above the top of its bearish structured profile. That's actually bullish for the Russell 2000. The top of that profile, 1439. The center, 1422. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So for John in Sarasota, he's asking about ticker symbol FENY. That is Fidelity Covington Trust MSCI Energy Index out here. And as we take a look at 3 different time frames, daily, weekly, and monthly, we'll notice, going from right to left out here, we'll notice that price on the monthly basis, John, is right now trading above the top of resistance, the top of its daily profile at 1120. We're at 1147 right now. Early in June, so we don't know what whether price is going to be able to take out that resistance level or not. On the weekly time frame, price is well above the top of its profile at 944, so that's good. And on the daily, brand new profile, bearish in structure formed today, but price is tested so far and rejected the bottom of that profile. That is $11.36 out there. Your question is, what can we expect? And so let's pull over our other charts out here. Right now, you can expect price to go lower if you see a close underneath 1136. And price to go higher if you get a close above 1208. That's really the daily time frame because of the bearish structured profile out there, John. Let me give you the center is at 1184, so the top 1208, center 1184. It's really not at the center, it's towards the top. And the bottom is at 1136 out there. So those are really, you're asking what can you expect? The expectation will come based upon what price is able to do at either the top or the bottom of that profile level. Nothing I can forecast which one is going to break, but whichever one does break, will communicate to you what its intentions are, at least short term. Now, if we take a look at the daily time frame, the daily time frame also shows that price, in essence, tested or very close to testing Stevie's green line and rejecting. That's 1122. So that's your go, no-go zone out here. As long as price is above that, things should continue to move higher. Now, your preference would be to really see price above 1193. 1193 is a TD9 count breakdown level that formed on March the 5th out there, so price is below that. Very similar to the market profiles. It has us in really a neutral stance right now. So now you've got a doble gi. I don't even know what that means, but you've got 2 patterns out here that are really in neutral type of position. Certainly not bearish. on a daily basis. Price is above the bottom of that daily profile and above Stevie's green line out there. Now, if price closed below the bottom of that profile, below Stevie's green line, 821 is wide open. Now, before it gets to 821, there may be other levels of support that it could hit, which is why we would take a look at, so now when we get to the weekly, John, we populated and see that last week was bar number 9 of the TD9 count pattern. You can't have a higher high in the bar following, so this could be a top out here. Didn't see the topping signal at all in the daily time frame, but the weekly rules would say price could pull back to 944. So this is saying be careful, but use that daily profile to give you the signal. Now, you would never short, I would hope. You would never short an $11 stock out there, but you can at least anticipate where price would what direction price would head to. So you got a topping signal on the weekly, and on the monthly, guess what? The counter trend rally. If this was just a counter trend rally, and you were going to pick out the point where it would stop, you would have chosen Stevie's red line, and that's at $12, and that's exactly what has transpired so far. So to summarize it, pay attention to the daily profile out there. That'll give you an idea as to what its next intentions are out there. But the weekly and the monthly are saying, hey, not so fast. Hope that helps you out. So the request line is a little slow or low, or not much. There's nothing else in the queue, really. That's all I needed to say. So let's go peek at the markets. Let's try to figure out. So we were talking about those new profiles, and very similar to what John and I were just discussing on ticker symbol FENY. It's really the same set of rules out here for the daily time frame for the ES, the YM, and the RTY. So you want to be able to watch those profiles. Now, we're getting ready to go off the air into that commercial, and I had thought that I don't know if it shifted. I thought the Russell 2000 was trading. Anyways, the top of its potential new box, 1439, the bottom 1388 and 1422. I did say because there's a new profile and prices above it, that is bullish. That is a true statement out here. So let's take a look at the Russell 2000 equity future contract. Let's take a look at the daily time frame and see what we see. With regard to topping signals, the topping signal that is present would be a Gartley sell. Now, you're seeing the Gartley buy that's out here. So there's Gartley sell and a Gartley buy. I won't spend the time filling that in, but that confirmed yesterday with that dark cloud cover. You also have wave number 7. That is letter G out here, very much like what we took a look at inside of Amazon. So remember, when you get topping signals, the only role of sellers is to try, the role of sellers is to try to bust out support. So it's so important to figure out, where is support? So you and I use basically 3 tools to figure that out. Those 3 tools are the oscillator and change line. That's the green squiggly line. It's not a moving average. You can't duplicate it or replicate it with a moving average. You can try, but you can't, because that's not what it is. But it is a key. It is a substantially key tool to help you understand, is this just a retracement or something else? So at 1:23 in the afternoon, it's just a retracement in the Russell 2000. Now, if price can close below Stevie's green line, 1467.90, another 11, 12 points from where we're trading. It's already been tested and rejected out there. Well, then that says, okay, because the line is green, further retracement. Well, further retracement to where? Well, then we come back to those profiles. That further retracement would be 1439, the top of the profile. 1422, the center of the profile, or the bottom, 1388. The Russell 2000 cannot give you a confirmed change in trend signal until you see a close below the bottom of that profile, 1388.93 out there. If I look at the short-term time frame for the Russell, just out of curiosity here, what's going on? So on the 30-minute time frame, I don't have any kind of a pattern. See, there's no A to B equals CD that's completed out here. There's probably a completed 1-to-1 A to B equals CD, but it has not confirmed. We don't have a sell to D point. So here you can see the 1 to 1.272 A to B equals CD. See, do not ever. Did I say ever? I meant ever. Do not ever. Well, you can if you want. Don't ever just sell the 1-to-1 A to B equals CD, or buy the 1-to-1 A to B equals CD. It's a real good way to have your tuchus handed to you. And you don't want that to happen. Why would Stevie say that? Just from years and years and thousands upon tens of thousands of charts out there. And knowing that price will continue to move higher or lower until the cavalry arrives, until there's a bullish or bearish reversal candle out there. And do we have that inside the Russell 2000 on a 30-minute time frame? Absolutely, positively not. So even though it made the 1.272 and it's bounced since then, well, where's it bounced to? Stevie's red line, 1482. So this is telling us Russell 2000 ready to make its way back and test the bottom of that current profile, 1468.30. I don't know whether we'll break it or won't break it out there, but that's the current message of the Russell 2000 for its 30-minute time frame. Hope that helps you out. What else do we want to take a look at out here? Well, let's take a look at, and we should take a look at, let's take a look at the NASDAQ. Let's look at the NASDAQ a couple of different ways. Let's look at the NASDAQ composite. And the way we look at the NASDAQ composite here is with our monthly horizontal trading range lines out here. The horizontal trading range is very similar to Bud Rolf's primary trading ranges, but not exactly the same. In my case here, I've automated it, so I've taken that concept or that tool, which is searching for the largest number of opens or closes, finding the second highest number of opens or closes on this chart, figuring out that dollar difference, and then adding it to each next level. Hey, cut to the chase, Steve-O. NASDAQ composite may be targeting 10,292. We'll be right back. Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow down 126, S&P's off 6, NASDAQ 100 up about 100 points. Let's go to our next question. This one coming in from Tim in Massachusetts. Tim says, Steve, can you elaborate on the counter trend rally you talked about with Tom O'Brien on Monday? Sure. So what we're taking, so we've got Tim. The first thing is to understand we've got each market is different. In fact, totally different out here. And so the counter trend rally, I believe I'm sure that's the word that I used out there, was really I was talking about the Dow, or I should have been talking about the Dow. Now, if we take a look at this chart here, this chart shows the monthly time frame for the Dow, S&P, NASDAQ, and Russell 2000, going from left to right, top to bottom out here. If you take a look at the NDX 100, here's how strong the NDX 100 is. If you just simply look at the trend line coming off of the February low of 2016 to the December low of 2018, the actual move lower in this Corona crash found support right there. I mean, really, right to the tick. Now, that's the bottom left-hand panel chart, and obviously we're at new highs out there. So no counter trend rally. In that case, it's gone on, and this is because of stocks like Amazon, the top 5 or 6 out there that represent 47% of the indice out there. Those are the so-called stocks that are going to be the winners and continue to be the winners. But the NASDAQ market out here, totally different than the Dow. Just go right up top out here. If we take a look at the Dow, you'll see, Tim, that I've drawn a little trend line from the high out here, again, this monthly time frame chart from January of 2018 to the high of October of 2018 to the high out here of July of 2019. And see how prices kind of moved right up into that level? That's that little red line out there. So that's really where the counter trend rally should end. This is where we should begin to see the Dow move lower for about 7 weeks out here. And if it does that, then come back and talk to me and we'll figure out where the Dow is trading in relationship to these trend lines in other areas out there. So that's the first thing. The Russell 2000, also just a counter trend move out here. It's just barely, quite frankly, above that same little trend line that we looked at for the NASDAQ, the 2016 levels out here. So that's step one. Two markets, two totally different areas. Which market is going to go back and test the March lows and take them out? What would be the Dow? I don't expect that we'll see that occur inside the NASDAQ 100. If we do, well, then we've got some real major problems going on based upon the stock chart patterns that we're taking a look at. Now, look, the reality is to just look at the U.S. markets out here and make the statements that I have and only look at the U.S. and be U.S.-centric out here would be a terrible thing to do. Because if that's how you're trading markets, then you're trading with really both hands behind your back, because this is a one world market. And you have to understand, you have to trade. You just have to understand what's going on across the globe. As I share with you all the time when we take a look at the futures contracts, you don't have to trade them. But if you want to become a pattern, if you want to become very good at what you do, then I would say do the same things that I do, only figure out how to do them better. Because that's really what I did. That's what I believe I did in all of my technical analysis. It was to suck up as much information as I could, try to figure out maybe something that wasn't observed with either sets of tools that I used that others hadn't used. And, look, we don't use the same light bulb, but we use lights all the time. We don't use the same light bulb that Edison developed. Do we? We don't. Okay, so where are you going with this, Steve? So you've got to understand what's going on around the globe. You need to understand the global flow of capital out there. If you don't do that, you just put a gun to your head and pull the trigger out there. You need to understand what's happening around the globe. Well, take a look at this chart out here, Tim. This is a set of charts. This would be a set of charts, I'm sure, that I shared with Tom on Monday out here. So here, this has got 9. Now, you can do this at home. You can add to this. So you don't have to just do this. But it's easier just to do 9 charts on my screen, 9 little boxes, as opposed to 10. It would get all misconfigured. So in the upper left, you've got the Dow via the diamonds. Again, each of these are ETFs representing indices in different countries. So next to that, you've got the United Kingdom, which, by the way, if you take a look at the United Kingdom, I want you to understand we're in a one world market. The United Kingdom topped in 2014. This is the EWU. This has already been in a downtrending market since 2014. Do you really think, now I'm not asking you this, Tim, I'm talking to Stevie here. No, I don't think, and it's only made a 0.618 retracement, and it has started to back off. 2014. Look, it gets worse than that as we go through this. If you take a look at the next one, Australia has been in a descending trend, a downtrend since 2011. This is how bad things are around the globe. And what we just did, I wasn't in on the decision to shut things down. I won't share with you what I'd shared with folks at Johns Hopkins when this whole thing came about and when they started showing their chart out there, but actually shared it with the chair of epidemiology out there. I wish he had listened to me. In any event, out here, so since 2011, you've seen the Australian indice move lower with lower highs and lower lows out there. That pattern hasn't changed. Take a look at what's going on in Canada over on the left-hand side. Canada's top out here took place in 2011 as well. Take a look at China. The top in China is been in place since 2018. Same thing for India. But see, everything is in a descending trend out there. The same thing for Germany. Its top in 2018. The same thing for Japan. Its top in 2018. Well, really, we could take Japan back a whole lot further and we could see a different top out here. And then inside of emerging markets, that high coming in 2018 as well. So, Tim, let's take a look at the world in total. Let's understand what's going on across the globe out here. The only breakout that exists is inside the NDX 100. That's the only breakout that is going on. There's a paradigm shift for those companies that are inside that NDX 100. Now, they led us higher out here. And what's moving higher today? The NASDAQ. And what's moving lower today? The Dow and the Russell 2000, the S&P just slightly. Who's going to lead us down is likely the Dow, even though it's got Apple, it's got Microsoft inside there, and maybe it's the Russell 2000 that takes the lead to the downside out here. But so that's really kind of the parts of if we take a look at other pieces of the global flow of capital, here's the last 12 weeks. There's no concentration of capital in any market out here. We just took a look. Look at how bad Germany is performing. Let's come back here. Let's take a look at Germany. Germany is where Canada, United Kingdom, Australia, India. Where's Germany out here? China. Oh, Germany, lower left out here. Look, the price just made its way up to that descending trend line out there. Right up to that descending. That's it. It's got lower highs, lower lows out here. And yet, if you take a look at the since that bottom in March 12 weeks ago, it's had a 54% rate of change to the upside. Somebody might take a look at that 54% rate of change to the upside and just say to themselves, wow, that must be a bottom. That must be a V bottom out there. Of course, ignoring the trend line, the retracements, and all of those other things. So, Tim, I will just summarize it like this. You look at those worldly charts, and you tell me what kind of market conditions we're in. And we just shut down the world economy. How poor are things going to get? And it'll impact these charts, too. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So you got the Dow off 104, S&P down 5 points. Let's go to our next question. This one coming in from Addie. Oh, Addie, nice to hear from you. So, hi, Steve. I'd like your thoughts on Tesla. You've got 75 shares of Tesla, holding it long-term. You're a long-term holder, and let's go. And the other personal comment, thanks much. I'll respond back to you later. So let's, and she was just referring back to the 67 riot in Detroit out there. So let's take a look at Tesla. Here's what we know. Trading up at new all-time highs right now, which is 1,005. It gap to the upside this morning. There's one gap, two gaps, three gaps, four gaps, five gaps that I can see out here. So, but today's gap is not larger than any of the others, so there's no three-gap play to the upside here. And percentage-wise, it's probably smaller than gaps 1, 2, or 3, whatever we would use out here. Okay, let's take a look at Tesla. It's above all profile levels. So no resistance out there that we can come up with here, Addie. Let's take a look at what's going on the different time frames. Well, here's the monthly time frame. Let's just stick with this. So on the monthly time frame, Addie, you say long term, this is going to be the month following bar number 9. So last month was bar number 9 of a TD9 count. Neither bars 8 or 9 were the high of this count, but this candle session, the bar following 9 is. When the TD9 count forms, it can be either bars 8, 9, or the bar following 9 that identify the top. So in the case of Tesla, the long-term chart or the monthly chart out here, saying it has potential for a top, so it just says to be careful and start paying attention to what's going on the charts below it. Well, let's go take a look at the weekly chart. In the case of the weekly chart, what signaled today, really two patterns from a weekly standpoint, but what signaled today was price moving higher, doing less relative energy, and we've got that trigger of that Rhodes momentum indicator pattern. Now, that won't mean anything to you. When I want to say it won't mean anything, well, it won't matter to you unless we see a bearish reversal candle to confirm this pattern. That's the first thing. The second pattern that is out here is this is going to be the week following bar number 9 of a TD9 count. And again, it's at all-time highs. So this also qualifies as a potential topping signal and says be careful out here. No, I'm not saying that exit the trade. You're just asking what's going on. You're a long-term holder. Looks like you've been a long-term holder since it was down below maybe 300 or so out here. So, a nice move. In any event, let's take a look at the daily time frame. Populate the daily. What signals do we have out here? And here on the daily, I don't have any kind of a topping signal whatsoever. There's A to B equals CD patterns. I can't draw them in on this set of tools, but you can visually see them out here. And if you were to see a bearish reversal candle, say a gap to the downside tomorrow would set up an island top, that would be your bearish reversal candle. I'm not saying that's going to happen inside of Tesla out here, but if you did get that, Addy, this would be telling you the price would pull back. Now, where are the levels of support on a daily time frame? Right now, 929 or so. That's Stevie's green line. And then you've got 846, 822, and 797. Those are the daily profiles. Below 797, 532 would be the number. So everything looks pretty good at this stage here, but you've got to be concerned, or you should be concerned, about the longer term charts, the weekly and the monthly. And that says keep watching the daily. Now, maybe you're not going to jettison your position, but just simply so you know what's going on with the equity, I'd really be focused on the daily time frame out there. So good to hear from you, and best of luck with your investment in Tesla. You're doing well so far. Our next request comes from Brent in Martinez, California. Brent wants to take a look at the FRO, Frontline Limited, that is. And looking at this as a potential long trade, don't have any position at the moment. So let's get my other chart. Oh, they're over. Oh, so if we take a look at Frontline, here's what we know right now, Brent. Trade above. It's pulled back. So it's pulled back a bit over the last 4 or 5 days, but above the top of its daily profile, which was 832, tested and rejected. The monthly profile shows us a consolidation, basically, between 943 at the top and 721 at the bottom. So the weekly chart is saying the buy into Frontline would be near that 721 level. At 703, that is the bottom of its bullish structured monthly profile. So your entry point here is saying 703 to 721. If price got below 817, the daily profiles would be saying to you, price is going to go tag 787. So your entry area, 703, 721, and 787. Now that's before we go take a look at my other charts out here, but that's what the profile signals are communicating to us. As we begin by taking a look at the daily time frame out here, you've got an A to B equals CD that completed. Price pulls been completed back in the end of April. Price does what with that pattern? Pulls right back to where it broke out. That was a 746. See how this candle out here from April 10th, not a swing point, not any kind of wide-ranging bar, so to speak, out here. Learn the nines, folks. If you take any one thing from me, use this one simple pattern to be able to help you identify support and resistance. Every one of you, for every chart, for whatever investment you have, you should know where breakout support and breakdown resistance is. You just, if you're trying to add or you're trying to exit a trade out there, it's the simplest tool. You do not need to be a technician at all. You just need to be able to understand where a close of each bar is to measure it to the bar 4 bars earlier, and so on and so forth out here. So this did top Frontline, Brent, with a TD9 count out here on June the 2nd. But then price pulls back to the bottom of that profile, just slightly above its breakout level of 741, 746, does it with a hammer candle. So there's on your daily basis, your breakout-ish area. And I know that you'll track volume as price pushes into that 741, 746 area and measure the volume compared to the swing point, let's say, of May the 15th out there. And if it's coming in with lighter volume, maybe that's your buy, but right now, really the consolidation between that 7-ish and 11-ish area. Now, that's the daily. On the weekly time frame out here, what do we have? Well, you've got a Rhodes momentum indicator top. That sent price down. We could be having an A to B equals CD to the downside. Could, but not until price closed below 721. That's the bottom of its weekly profile. Would we have that signal? We don't have that just yet. And on a monthly time frame out here, we pull this back even further. So on the monthly time frame, Brent, this tops with a TD9 count. See, folks, please, if you're listening to this show, I know I know we have much in common. I guarantee you that. I know that you're a giver. I know that you also are a receiver and that you like to learn. I know you live by a simple rule. The simple rule is, if you want more, you have to become more. It's really that simple. That's what gets me so going out there when I see just simply the BS, the before Steve information, when we start taking a look at what's going on the boob tube out there, about what's going on in society and so forth. This is not a complicated thing out here. Folks, when it comes to technical analysis, I started at ground effing zero. The only way you go from zero to hero, you have to invest more in yourself. You have to learn more. It's so worthwhile. If you're not learning, you're dying. Nobody wants to die. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive.
We take it every morning. Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. And hey, Brent, sorry about going off track there for a moment. We were really taking a look at your stock, Frontline FRO is a ticker symbol. So you've been watching it. We've been taking a look at, some of the profile levels out there, where price might pull back to. Look, I think the ultimate entry on this would be the breakout level on the monthly basis. And you can see that price is sitting right now at Stevie's red line at this 842 level. So if we can see this pull back below that area, that 633 would be the ideal entry. That's the breakout level on a monthly time frame. So I hope that helps you out. Thanks so much, and thanks for putting up with the little Schlemiel, Schlemazel, whatever it was. Let's finish out the show by taking a look at ticker symbol CRB, as in boy, P. And this is for one of our dentists. This is Corbus Pharmaceuticals out here. Having a nice day, nice volume in this. Don't know what they solve, but price right now trading above the top of its daily profile, trading above the top of its weekly profile, and above the top of its monthly profile. So all that looks good, says it's above resistance levels. Let's go take a look at Stevie's other charts out here, get a feel for anything else that might be going on. I don't have anything else out here on the daily to suggest that this shouldn't continue to move higher and head back up to its previous high. So no pattern there. If we take a look at the weekly time frame did top with a TD9 count out here. It was the bar following bar number 9. That was on May 29th out here. But price, in essence, pulled back, came close to testing Stevie's green line. Again, with price being above the top of that weekly profile, things look pretty good there, too. This would suggest that what price is trying to do is get up to the 990 level out there. And then finally, on the monthly time frame, do we see anything? I don't see a darn thing out here. So it looks like price does want to get up back towards its high. Again, that was ticker symbol CRBP, Corbus Pharmaceuticals. So, folks, thanks so much for being here today and every day. Stay tuned because we've got 2 more great hours lined up for you. I've got my favorite polar bear, David White, and after that, Tom O'Brien to take us on home from 3 to 4. And I'll be back with you on Thirsty Thursday, although I'm pretty thirsty today, so we might just have to move that up a day. Take care, folks, and have a great Wednesday.